Good morning and welcome to Market Cafe with me, Ankur, Mishra and Kanishka. Sarkar. In next 1 hour, we'll bring you all the news and updates that matters to you before opening of market, and we'll also tell you how Asian markets are performing to overnight news. But let's get started with US markets first. Good morning, Kanishka. How were US markets on yesterday?
Good morning, Ankur. Well, all three major indices on the Wall Street fell overnight. The Dow Jones Industrial Average that shed nearly 300 points or 0.7%, whereas the S&P 500 that slipped 0.8%, whereas the Nasdaq Composite that lost almost 1%. Now, oil futures also ended the session up by more than 4%, which kept the stocks under pressure. Now, this continued decline in stock comes in the face of the mounting conflict between Iran and Israel. During yesterday's trading session, energy was the only sector that ended the day higher. In fact, it gained more than 1% on the back of rising tensions in the Middle East. Now, on the other hand, the healthcare sector that fell more than 1.5% and was the worst performing cohort. Now, healthcare stocks alongside materials and consumer discretionary stocks are now more than 10% off their 52-week highs. Now, going forward, all eyes are now on the Federal Reserve's rate decision, which is due later in the day. Now, the U.S. Central Bank is widely expected to hold rates steady, but investors will be keeping a close watch on Fed Chair Jerome Powell's commentary following that. Other than that, U.S. data to be released today also includes May's housing stats and also weekly jobless claims. That's something that we'll be watching out for. But Ankur, how are things looking on the crude front?
Yes, crude continues to be on fire. In fact, the futures surged 4% overnight. WTI was holding near $75. And if we talk about Brent, that was around $76. Now, the mounting tensions between Israel and Iran is continuing to keep oil on rise. And we have seen that Goldman Sachs, in fact, seen oil soaring $100 mark soon. Apart from that, if you also see gold, that has risen, and that was hovering around $33.90 barrel, and even 10-year treasury yield slipped to 4.4%.
That's right. Now let's get tracking the top global stories. Now, Israel and Iran air war has now entered day 6. With no signs of de-escalation, Israel says that Tehran launched 2 missile barrages early today, triggering explosions over Tel Aviv. Now, in retaliation, Israel has warned that residents near Tehran to evacuate as it targets Iranian military sites. Explosions were also reported in Karaj, west of the capital. Now, amid these rising tensions, the U.S. has deployed more fighter jets to the region. Trump bluntly called for Iran's unconditional surrender on Truth Social, now even hinting at knowing Supreme Leader Khamenei's whereabouts, while adding that he won't be targeted for now. Now, Trump has also spoken with the Israeli Prime Minister Netanyahu. Meanwhile, the report suggests that Iran has banned officials from using mobile phones, which is raising speculation around internal communication security. Now, for a detailed check of crude prices and how all of this is impacting the energy markets, let's take a look at this report that Ashesha has filed.
Well, yes, oil market continues to be in focus today, and after a solid 4% run-up that we saw in yesterday's trading session, Brent crude is up another 0.4% today to trade near that $76.8 per barrel mark. Remember, this is the highest level that we have seen since February 2025, so highest level in almost 4 to 5 odd months. And from the recent low of about $60 per barrel, which we hit in the month of May, Brent crude has recovered nearly 25% in a matter of just 40 to 45 odd days. Now, the reason today, of course, is rising tensions in West Asia. And remember, there is speculation that US President Donald Trump might also join this particular conflict. So on the back of that, geopolitical tensions continue to escalate and oil market continues to remain in focus. Now, remember, the most important element over here is the Strait of Hormuz, where Iran has in the past threatened to block this particular waterway which supplies nearly 1/5 of global oil requirement to the world. As of now, there is no disruption in this particular waterway, but there are fears of supply disruption, and if Iran goes ahead and blocks Strait of Hormuz, then supply is likely to be disrupted, and this could push oil prices further higher. But for now, there are only fears. Nothing has actually fructified, but on the back of escalating geopolitical tensions and that US probably could join this particular fight against Iran, we have oil market in focus, which is now trading near $76.8 per barrel.
Thanks, Ashesha, for all those details. But let's understand this geopolitical conflict in detail. Rishabh from Times Network also joins in with more perspective on this developing story. Rishabh, is there a risk of US interfering in this conflict, or is there a threat of full-blown war?
Well, one thing is very clear. Iran does not want to back out from here. They are not in mood to negotiate, and they're not in position to actually retaliate with the same might as Israel is doing, given that their launchers, their, half of the Air Force, their top military leadership, that has been destroyed by Tel Aviv. And in a very decisive move, the way the Israeli Defense Forces are moving in Iran, the way the air superiority has been maintained for the last 48 hours, and now the way United States is signaling its all might behind Israel, it is very clear that Iran is not going to have it easy from here on. Remains to be seen whether Donald Trump will enter this whole war physically or not, whether they'll send their troops, their fighter jets, their warships in the war or not. But the way Donald Trump's statements have been coming, and especially the last three statements, if we see where he asks Iran to surrender, he informs that how the operative word we is there, that we have total air superiority, air dominance in Iran, and then we know where the so-called quote-unquote supreme leader is. So Donald Trump is giving all its hints that the United States is considering to join the war. Whether they will join the war or not, that is something that needs to be seen. Overnight, the Jerusalem embassy of United States have been shut till Friday. Remains to be seen how things unfold in the day. Overnight, there were a lot of anticipation of statements coming in from United States. Those statements haven't come in. The Situation Room meeting has ended. There was supposed to be a press conference. We haven't heard much from White House as of now. So we'll have to wait on that front. But meanwhile, the escalation between Iran and Israel continues with every passing minute.
All right, thank you, Rishabh, for all those details. But moving on, now top oil CEOs, they have also raised red flags as Israel and Iran trade fresh blows. Now, Shell CEO, Total Energies, and Enquest, they've warned the spiraling conflict threatens of global energy stability. Now, while major oil flows remain intact, facilities in both countries have been hit, which has fueled fears of wider disruption. Now, Shell CEO Wael Sawan, he has said that the past 96 hours have been very concerning, pointing to the risk of escalation, including a potential blockade of the vital Strait of Hormuz. Now, energy markets are also now bracing for the impact. In fact, Middle East tension has led to a sharp spike in crude oil prices, as we were discussing earlier. Now, S&P Global's Zuwei Wang expects oil prices to soften only by the last quarter of the financial year. Let's listen into him.
Yes, indeed. I think, first of all, there has been no sign of de-escalation as of today, right? So actually, in coming hours or days, definitely we will likely see some potential escalations between the two sides by having more rounds of intensified attacks from the two sides. If there's no major disruption happened to the supply of the oil coming from the Middle East regions, we think eventually that will come back to the fundamental driven dynamics, which is definitely the oil prices will be going down and softened throughout the fourth quarter of this year. Our base case, we still continue to see that OPEC Plus will continuously add additional 411,000 barrels per day of supply into the market in coming 2 months. Oil prices for Dated Brent, for example, on a monthly basis, it will still standing at around 70 and even maybe lower, higher 69 or 68 or lower 70s in coming weeks and months.
The bigger question is how will oil price rise and the escalation between Iran and Israel impact India? We understand India has enough oil stock and there is no immediate cause of concern. That's a word coming in from Petroleum Minister Hardeep Singh Puri. Meanwhile, sources indicate that India's oil import basket is already diversified to mitigate any risk amid geopolitical crisis. My colleague Prakash Priyadarshi has filed this report earlier.
The World Ministry sources are suggesting that there is no shortage of crude oil in the market. In fact, its availability is not an issue as India has already diversified its import basket from 22 countries to 40 countries now. And therefore, crude supply is not a concern at this point of time. Along with that, the oil marketing companies are well prepared and well positioned to handle the current situation. However, a disruption in shipping routes may cause concern as it may spike transportation costs going forward. Along with that, sources are also indicating that crude prices may pinch if the Israel-Iran conflict persists for a longer period. However, sources are also of the view that a closure of the Strait of Hormuz may pose a potential threat, which is unlikely considering the fact that considering its huge shipment volume and it's not in anyone's interest. Therefore, availability at this point of time is not an issue for the government, and oil marketing companies are well prepared to handle any sort of situation. It is important to note that the oil minister is having a regular review meeting with the oil ministry's officials and oil marketing companies, and hopeful that India will navigate the current situation to protect its interest.
All right, then that's the latest coming in on India's oil situation. But moving on, later tonight, all eyes will be on the Fed. Now, while rates are expected to stay steady, markets are bracing for what comes next. Now, the central bank is expected to send signals on inflation, growth, and also rate outlook. Now, investors will be watching for Fed's dot plot for any clues on how many cuts, if any, may come this year. Now, political pressure is also mounting, with Trump pushing for looser policy as global tensions and tariff risks cloud the outlook.
US, let's shift focus to Japan. Japan's export shrank at their sharpest pace in 8 months, down 1.7% year on year in May, reversing April's gain and signaling weak global demand. The drop was softer than expected, but imports also plunged 7.7%, pointing to subdued domestic activity. This comes a day after Bank of Japan warned of slowing growth. Adding to trade tensions, Trump has called Japan tough in ongoing negotiations after 6 failed rounds of talks.
All right, then moving on, shifting focus to some tech companies. Now, TikTok is getting a 90-day reprieve as Trump has extended the deadline yet again for China's ByteDance to sell its US TikTok operations. Now, this marks the third such extension since he took office. The White House has also said that Trump doesn't want TikTok to go dark. And now he'll sign a fresh executive order this week itself. Now, the delay pushes the decision past June 19, giving more time to close the deal. However, Beijing's approval still hangs in balance.
And Amazon's workforce is set to shrink, not because of cuts, but because of code. CEO Andy Jassy says that generative AI will reduce the need of corporate roles over the next few years as the company leans heavily into automation. In a memo, Jassy urged staff to get more done with scrappier teams and embrace AI tools. Remember, the e-commerce giant has laid off over 27,000 employees since 2022 as it now uses AI across its supply chain.
All right, then moving on, let's get the latest on G7. Now, Prime Minister Narendra Modi held key bilateral meetings on the sidelines of the G7 summit with Mexico's new president, Claudia Sheinbaum. Now, both the leaders have agreed to boost cooperation in trade, tech, innovation, while also exploring nearshoring and affordable medicine partnerships. Now, in talks with German Chancellor Merz, the two leaders discussed deepening ties in defense, green energy, education, and also mobility. Now, he has also concluded meetings with the leaders of France, South Korea, Canada, among others. Sumita Kareed is joining us now with all the details. Sumita, over to you.
That was not the only meeting that the Prime Minister held. He also concluded several meetings with the premiers of France, Mexico, like you said, South Korea, European Union, Brazil, Japan, and most importantly, Canada. Remember, that was the meeting that everybody was watching out for and was waiting to see how it will unfold, given the fact that ties between India and Canada plummeted in 2023 when Justin Trudeau was at the helm of affairs. But given this meeting, this was a good meeting that was held between both the sides. Both sides agreed to add momentum to ties. In fact, the Prime Ministers from both sides, they agreed to increase cooperation in areas like trade, energy, space, clean energy, critical minerals, fertilizers, and of course, most importantly, the readout that was issued stated that India and Canada are connected by a strong belief in democracy and freedom and rule of law. So that really underlines the focus that this meeting had, which was essentially to have a new reset in ties and, of course, to start afresh. Both sides, of course, also agreed to start taking calibrated steps to restore stability in the Indo-Canadian relationship. And that's going to be with the beginning of the early restoration of high commissioners from both the sides. So there are going to be senior level discussions that will continue between India and Canada on trade connectivity and people-to-people ties. Of course, cooperation between both sides was expanded in clean energy, digital infrastructure, AI, food, and critical mineral supply chain. So that was what was discussed. Now, the Prime Minister, we're given to understand that he has left Canada and he enters now into the next leg of his visit, and he is all set to visit Croatia.
For all those detailed and consistently reporting on G7 and other geopolitical matters. But on the sidelines of G7 meet, Canada Prime Minister announced billions in support of Ukraine and tougher sanctions on Russia as he recommended the recent Russian attacks. In fact, he condemned the recent Russian attacks, and Canada is also lending the war from country $2.3 billion to help rebuild its infrastructure and public systems. Let's listen in.
This morning, I shared with President Zelensky and G7 partners what Canada is doing moving forward in multiple respects with measures to support Ukraine in its struggle in Russia's unjustified and barbaric war. With our international partners, we're launching a major new package of sanctions on individuals, on companies, on vessels, the Shadow Fleet, to exert maximum pressure on Russia. We're also sending over $2 billion in funding for drones, ammunition, armored vehicles to help Ukrainians defend their territory.
All right, then that's the latest word coming from G7. But moving on, let's take a look at all the global cues that we'll be watching out for today. Now, in the US, as I mentioned earlier, FOMC rate decision is something that we'll be watching for. Other than that, there's initial jobless claims data. That is something that will be out today, later in the day. Both from UK and the Eurozone, CPI data is something that will be released later in the day, so something to watch out for. Now, back home, in terms of corporate action, we have Vedanta Board, which is expected to mull an interim dividend today. Now, moving on, it's also the last day to buy shares to be eligible for a dividend when it comes to Tata Communications and Tejas Network.
All right, with this, it's time to take a quick break, but don't go away. We'll bring you Asia Pacific market check after the break. FNO contracts from Tuesday to Thursday. We spoke exclusively to BSE MD and CEO S. Ramamurthy and Chief Development Officer of National Stock Exchange, Sri Ramakrishnan. Let's listen in.
NSE has requested for Tuesday BSE was having Tuesday and it was very comfortable with Tuesday. Since NSE has requested for Tuesday, in the overall interest of the market, BSE has taken Thursday. Change of expiry days has not been very unusual in India these days, and so there has been a set procedure as to how it gets dealt with. And the regulators have also stipulated how to go. The existing contracts will continue till August 31st. New contracts with new expiry will be from the 1st of September. No fresh weekly contracts expiring on Tuesday will be issued by us. So they have clearly laid out the procedure. Notwithstanding that, even more clearly, BSE will also be giving a very detailed process to the members so that the process is smooth for everybody.
NSE has been having discussions with members both in India and outside India, as in those who are trading on NSE have expressed a desire to see that NSE products expire on Monday if possible. So we had therefore issued a circular to go live in the first week of April with Monday expiries. Regulations permitted this, and obviously we could have therefore gone ahead and got this done. However, SEBI issued a consultation paper on 27th March and requested NSE to postpone our plan for Monday expiry. Thereafter, SEBI in the consultation paper proposed only 2 days in a week as expiry days potentially, which was Tuesday and Thursday. BSE at that point in time, in fact, changed their, this was, when the earlier rationalization took place, they had changed to Tuesday from Friday. And in fact, even before that, they have changed a few times. And there was no impact at that point in time for them. However, given whatever has happened in terms of the consultation paper, we had requested SEBI to give us Tuesday expiry. Now, after about 3 months or so, we have got the approval for Tuesday expiry. So this is really the sequence of events in a nutshell.
All right, then that's the latest word coming in from the top management at BSE and NSE. But moving on, let's also assess how this change in expiry to Thursday will impact the BSE. Sharad is joining us with all the details and what the brokerages are penciling in. Sharad, over to you.
Interestingly, BSE has changed its weekly expiry, and the date has come from Tuesday to Thursday, and this will be applicable starting from 1st September. Now, why it is important for BSE is that BSE index option market share that rose close from 0 to almost 23 to 24% in just 2 years. But that has been stagnating over the last couple of months as per broking houses. Now, what's the impact analysis of BSE? It's largely expected to be negative. The shift will lead to a loss in market share. As per Motilal Oswal, the BSE premium turnover and their current market share stood at roughly 23% in May 2025. Now, each of these days accounts for almost 18 to 22% share in the week's total premium volumes. Now, BSE has a market share of 8% on Wednesday and Thursday, and 21 to 38% when it comes to Friday, Monday, Tuesday. Interestingly, the overlaying current trends of the day-wise share in the volumes from the week, and they expect a market share loss of roughly 350 to 400 basis points. But the brokerages, they have mixed reviews. It's not always negative for BSE. Motilal Oswal, they have reduced the earnings expectations between 9 to 12% for FY26 and FY27. Goldman Sachs, 8% EPS downside risk, but there is a silver lining as well. Jeffries has stated that BSE has now started to have an ability to build liquidity in long-term contracts, and this can actually offset the impact as well. Looking at the stock has given a very handsome returns to the investors, going up almost 192% last 1 year. But recently, post-announcement, the stock has actually kind of, we could say, cooled off from its high levels by almost 11%. But if you look at the valuations, still on the higher side, trading at 53 times its 12-month forward P ratio. And if you look at the brokerage stake, also there are downgrades coming in. Motilal Oswal downgraded to neutral from buy. Target price was cut from 25.33 to 2300. Goldman Sachs is maintained neutral, but a slight cut in target price from 2490 2430, but maintaining trust in the companies. Jeffries maintaining hold, 2900. Target price remains unchanged. Sharad, for all those detailed but Moving on the latest edition of ET Now on the Go, we caught up with Ashok Leyland's MD and CEO Shenu Agarwal in Chennai. And speaking about exports, he says the company is eyeing to achieve 3 times of current export units in a few years. Let's listen into what he had to say.
On the export side, we are very happy that we are growing very fast on exports. But we are not satisfied because the reason is that we think there is a much more bigger potential available in exports. But our strategy on exports is very different from many others because our strategy is not to just put vehicles out in any market. Our strategy is that wherever we go outside India, we treat that market as our home base. So we just treat it like we treat India, which means hiring local people, setting up local offices, setting up assembly facilities, partnering with good long-term distribution partners. So you can see, if you look at our exports history, you can see that we have been in GCC and we have been there for many years. And we have created a complete Ashok Leyland ecosystem in GCC like we have in India. We have a local factory, we have local offices, we have local people, we have local sales team, local service team, and we have very good partners. So that is our approach. So we do see a very good potential in growing exports volume.
All right, then on to another latest conversation from ET Now on the Go. Now, we caught up with V8 Equivag's CMD Rajiv Mittal to understand what the key targets are for the company over the next 3 to 4 years. Stay tuned for the full episode, but here's a quick conversation from there.
We had clearly told them 15-20% year-on-year growth, 15 to 20% return on equity and return on capital employed. We will be a free cash generating company, cash positive company, no debt. All this we have said, and our order book always will be minimum 3 times of our revenue. This was a promise we gave for the next 3 to 5 years. We are sticking to that, and that itself will give them a feeling what growth this company can get.
Is going to be offloading 7,500 crore worth of shares via block deals in Hindustan Zinc today, so watch out for this. Another stock that will be in focus on the back of block deal that was already done yesterday, but we have the details of that, is TVS Supply Chain, because you have TVS Motor Company that has bought the 39.5 lakh shares that Autumn Investment and Infrastructure Limited has sold, and this has been done at a price of 144 rupees per share. Moving away from that, let's talk about Polycab. They've executed a contract worth 6,447.5 crores with Bharat Sanchar Nigam, which is BSNL, to act as a project implementation agency for the BharatNet project in Karnataka, Goa and Puducherry. So positive news flow for Polycab. Bharat Forge will be in focus because the company and a French company, Turgis Gaillard, have signed an MOU to offer the ROQAV in alignment to the Indian Ministry of Defence. So if this works out, Bharat Forge is going to see some positive moves. M&M is going to be in focus because they've received unconditional approval from the CCI for their proposed acquisition of stake in SML Isuzu, and the company is going to be making an open offer at about 1,554.6 rupees per share. Delivery next up, also in focus on the back of some CCI approval, because CCI has approved Delivery's proposal to acquire at least 99.4% stake in Ecom Express, and this is going to help the company expand its logistics business and e-commerce presence. And lastly, RailTel, positive news flow. They've received an LOI from Zoram Electronics Development. Estimated size of order is about 44 crore rupees. So watch out for all of these stocks in today's trade.
All right, thank you so much, Snehi, for that list. But other than this, Voltas is something that's also likely to be in focus today on the back of its management meet, right? Now, erratic weather in April and May have dented demand for room AC. The company also does not plan to take any price hikes going forward. So what are the brokerages making of it, and what are the key takeaways from the meeting?
First, let's talk about the key takeaways of Voltas' management meeting. The commentary is not very optimistic. It's slightly cautious given how early the monsoons have started this year. Unfavorable weather in April and May has caused a 20 to 25% drop in RAC sales, which is room AC, and Voltas has also seen a similar decline. North India has seen some recovery in June due to heat waves, but other than that, there is not much optimism when it comes to RAC sales. So the company remains watchful on outlook given the weather conditions. On the back of this, Motilal Oswal has downgraded the stock to a neutral from a buy rating, also cut the target price to 1,350 from 1,600 earlier. They've reduced FY26, FY27 UCP revenue, UCP segment margins estimates as well. That's unitary cooling products. That's the segment. And in terms of segmental moves, UCP has seen delayed summer and early rains disrupt demand. The company had anticipated a strong summer, on the back of which they have a lot of inventory overhang now. The Chennai plant utilization has also remained low due to weak demand, but the company does not foresee any significant price hikes in the near future. For their EMPS segment, the domestic growth ahead is selective in terms of international order, and for Volbec, growth continues to outpace industry growth. So, well, some segments are doing well, some segments are doing weak, but on the back of that, Motilal Oswal's view, they've downgraded the stock to neutral from a buy and also cut the target price.
Thanks, Snehi, for all that roundup. But with this, we are completely out of time in this edition of Market Cafe. Thank you for watching.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.